Hi traders, you are welcome back to the Forex Geek channel. In this video, we are going to be diving deep into one of the most important concepts in technical analysis, and that is support and resistance levels. All right. So if you've ever struggled with identifying strong levels or figuring out why price reacts the way it does, then this video is for you. Stick around because by the end of this video, you'll know exactly how to master these key zones and use them to your advantage. Now, before we jump in, make sure to smash that like button and subscribe to the channel for more powerful trading insights. Okay, let us get started. All right. So, first things first, what are support and resistance levels? Now, simply put, these are price zones where the market tends to react. Okay, support is a price level, where demand is strong enough to prevent the price from falling further. So that is where we call a support zone, right? A price level, or rather a price zone, where demand prevents the price from falling further, while resistance is where selling pressure is strong enough to stop the price from rising higher. That's what we call the resistance zone. So think of it like this: support acts as a floor that holds the price up, and resistance acts as a ceiling that holds the price down. Now, whenever price reaches these levels, it either bounces off or breaks through. And that is what traders use to make informed decisions. Now that we know what they are, how do we actually find them on a chart? Now, here are a few proven techniques. The first is looking for historical price reactions. If a level has been respected multiple times in the past, right, it is likely to be significant. Okay, and then you can use round numbers. Price often reacts to psychological levels like 1.1, 1.2, 1.5, 150, 200, 250, and so on. Okay, so you can pay attention to such price levels. Okay, for example, on a pair like the Euro USD, you want to pay attention to levels such as the 1.1000, 1.2000, 1.50, and so on, right? So you can also use trend lines and moving averages, okay, because trend lines act as dynamic support and resistance levels. All right, and then you can pay attention to moving averages such as the 50 EMA and the 200 EMA. They are actually a popular combination. Doesn't mean that you can use only these specific moving averages. You can use a whole lot of periods, right, depending on your trading style. So but key moving averages like the 50 EMA and 200 EMA, they often align with strong zones. Okay, the key is to focus on zones rather than exact price points. As you can see, I am drawing a zone on the chart. I am using a rectangle, right, to map out resistance zones, to map out support zones, because these are zones, right? They are not just exact price levels where you expect price to get to and reverse immediately. As you can see, that the exact point where this swing reversed is different from the exact point where this swing reversed. Can you see? This particular at this particular time, this was where the reversal happened, right? At this particular time, this was where the reversal happened. But it doesn't mean that there are two different resistance zones. This is a resistance zone. Okay, it's just that the price could reverse at any point within the zone. Same with this is a support zone, but you can see that we had two different points of reversal. Now there are actually some cases where you have price reverse at almost identical price points, almost identical. Okay, there are situations like that. We can see what happened here. You can see that the price reversed at almost identical price points. You can see now there are actually situations like that, okay, but it doesn't mean that it always happens all the time. So that's the reason why you should just map out your zones and pay attention to that. All right, now let's talk about some of the biggest mistakes that traders make when using support and resistance. One is forcing levels that are not there. If price has not reacted at a level before, it is probably not strong enough. Okay, so pay attention to that. Do not ignore market structure as well. Support and resistance work best when combined with trends and price action, all right, not in isolation. Okay, and then next, do not over rely on one time frame. A level might look strong on a 15-minute chart, for example, right, but on the higher time frame, it might be saying something else. So that is the reason why it's important to do multiple time frame analysis. All right, and then do not make the mistake of not considering fake outs. Okay, sometimes price briefly breaks through a level before reversing, so this is where confirmation strategies come in handy. All right, avoiding these mistakes will help you use support and resistance more effectively and prevent unnecessary losses. All right, so now that we know how to identify strong levels and avoid common mistakes, how do we actually trade them? So here are two powerful methods. Okay, the first method is the bounce trade. All right, you should wait for price to approach a key support or resistance level. After that, look for confirmation signals like candlestick patterns, perhaps pin bars, or engulfing candles, or any other candlestick pattern that you can find. Bearish candlestick pattern around the resistance, bullish candlestick pattern around the support. Okay, then you enter the trade with a stop loss just beyond that level. Okay, and you target the next zone for your take profit. For example, if we are entering a buy trade after we get a bullish confirmation, we can set our stop loss right below the support zone, and we can target the nearest resistance zone for our take profit. We actually have a resistance zone around here. Can you see multiple rejections here? So you can use the nearest resistance zone for your take profit level. All right, while you set your stop loss just below the support, then if you are in a sell trade, after you get your confirmations, you can use set your stop loss above the resistance and target nearest support levels for your take profit, but ensure that you have a good risk to reward ratio. Okay, now this approach helps you avoid false breakouts and improves your overall trade accuracy. All right, traders, that is a wrap. Now you have everything you need to master support and resistance levels and start using them effectively in your trading. If you found this video helpful, make sure to hit that like button and subscribe to the channel for more high value trading content. Drop a comment below if you have any questions or if you want me to cover another topic in detail. I look forward to hearing from you. Okay, and don't forget to turn on notifications so you never miss an update. See you in the next video. Stay smart and trade smart, and don't forget to stay disciplined. Right, cheers and happy trading.